What's going on, everyone? Charlie here. I've had a lot of people bring up the Fed SR 21-19, talking about Archaegos, and I was going to talk about that real quick. Let's get into it. So before we get into it, and of course, if you're not sure what this is what we're referring to. It is a document that everyone's passed around on Twitter, social media, concerning margin and the Federal Reserve, things like that, risk. It was put out on December 10th, 2021. The name of it is SR 21-19. And the subject is the Federal Reserve reminds firms of safe and sound practices for counterparty credit risk management in light of the Archaegos capital management default that happened back just before April. So a couple things to look into before we get into the actual document. So what happened in March 2020 during the depths of COVID? Well, the Fed Reserve System passed 12 CFR Part 217, which was Regulatory Capital Rule, temporary exclusion of U.S. Treasury securities and deposits at Federal Reserve banks from the supplementary leverage ratio, or SLR. I'm sure you've heard the term SLR. So part of the text reads, in order to facilitate holdings companies' significant increase in reserve balances resulting from the Federal Reserve's asset purchases and the establishment of various programs to support the flow of credit to the economy, as well as the need for these institutions to continue to accept exceptionally high levels of customer deposits, the board is issuing this interim final rule to temporarily exclude treasuries and deposits at Federal Reserve banks from total leverage exposure for these institutions through March 31st, 2021, as calculated under the board's capital rule. For purposes of reporting the supplementary leverage ratio as of June 30th, 2020, banking, and then it cuts off. Supernote 4 there. I should have taken out that last sentence there, my bad. But Supernote 4, the board, together with the Office of the Comptroller of the Currency and the Federal Deposit Insurance Company, or the FDIC, recently issued a final rule effective April 1st, 2020, which implements Section 402 of the Economic Growth, Regulatory Relief, and Consumer Protection Act by amending the capital rule to allow a banking organization that qualifies as a custodial banking organization, like Citigroup, to exclude from total leverage exposure deposits at qualifying central banks, subject to limits 402 rule. The 402 rule came into effect on April 1st, 2020. Now keep in mind, Gary Gensler was not even sworn in until Saturday, April 17th, 2021, after SLR had already expired. Because remember, SLR was active. It's basically relief for these big banks during COVID that lasted from a period until April 1st, 2020 until April 1st, 2021. Now, Gary Gensler was sworn in on April 17th, 2021, on a Saturday, the first time since Watergate anyone was sworn in on a Saturday. This is what happened. So this is where we were before SLR was passed. Do you see the repo demand going up? Then what happens? It disappears. Why? Because SLR was activated. The demand subsided. And then it just so happens for the whole year that SLR was active, there was no reverse repo demand. But then what happens here? All of a sudden, right at the end of March, right at the beginning of April, the second that SLR ends, the repo skyrockets to historic levels. So now that you know all that, let's get back to the Fed Reserve letter. And by the way, as for the market operations that they're talking about for monetary policy, these are the different operations that they do, that the Fed Reserve is doing to keep everything alive. Outright Treasury securities operations, securities lending operations, foreign exchange swap operations, foreign holdings, Federal Reserve balance sheet, agency MBS operations, tri-party, general collateral rate. They have tri-party repos as well. Agency mortgage-backed securities operations, repo operations. That's right, it's different than the reverse repo. Secured overnight financing rate, SOFR, which is what they're transitioning to next year. I mean, it's a lot, right? And it's all with the Treasury, and it's very convoluted. So now that we know all that, now take another look at this letter. Archaegos Capital Management, an investment firm heavily concentrated in a small number of U.S. and Chinese technology and media companies, defaulted on March 26, 2021, right before SLR expired, causing over $10 billion in losses across several large banks, principally outside the United States. The Fed Reserve, along with other U.S. and foreign regulators, initiated a supervisory assessment to understand the actions that led to Archaegos' failure and assess any risk management shortcomings at supervised firms. In light of the Archaegos default and in context of firms' relationships with investment funds, the Federal Reserve is issuing this guidance to remind firms of the supervisory expectations and intricacy supervisory guidance on counterparty credit risk management, and to make firms and industry participants aware of practices that may be inconsistent with safe and sound banking practices. This is where you stop reading because you realize it is bullshit. The Fed knows what's going on. The Fed is causing historic repo demand. They are doing open market operations to keep the monetary policy alive, to keep the economy churning. They're funding all kinds of different countries through the reverse repo, through money market funds. The data's there. We know this. So, is this letter anything of concern? No, it's all bullshit. Lastly, the Fed Reserve is concerned that firms may agree to margin terms inappropriate to their investment fund clients, failing to provide for adequate margin levels or sufficient risk sensitivity. It's all a bunch of bullshit so that the everyday person that doesn't know all this other shit reads this and they blame someone other than the Fed because the Fed's not taking any responsibility for any of this. And at the same time, in the background, this shit's going on. And guess what happened? That would have happened a lot sooner if it wasn't for, that's right, the CFR implemented rule that the Fed fucking set up in March during COVID of 2020. It's not by coincidence that the exact period of time SLR was active, the repo demand, it was like a little barrier. There was non-existent. And then as soon as it expires, you input Gary Gensler like right about here somewhere, and it just goes to not even close. Historically, not even close. So if you get anything like this from the Fed, the media, anyone that's in the organization, anyone that's working for Wall Street, remember, it's bullshit. And all you have to do is read it to know that. So, nothing to see here. But, hey, I hope you learned something.